prices in the next 6 months? And the answer is it doesn't matter. That's not what matters. If you think those are all of you last week said to me, well, what's the least important thing for investors? I thought for a minute. I hadn't had that question before. The least important thing is the short run. Everybody's obsessed with what is going to be inflation over the next 6 months. What will the central bank do in terms of interest rates to fight the inflation? And will the changes in interest rates produce a recession? This is what everybody wants to know. And consequently, of course, what will happen to security prices in the next 6 months? And the answer is it doesn't matter. That's not what matters. If you think those are all short-term considerations, it's all about the next 6 months, 3 months, 12 months, whatever it might be. Number one, we really can't know much about the short run. Number two, if we develop an opinion about the short run, we shouldn't have too much confidence in it. It's hard to get that right. Number three, nobody should change their portfolio wholesale in response to what they think is going to happen over the next 6 months. And number four, it's not the next 6 months isn't what matters. My clients and your clients should be investing for the next 10, 20, 30 years. And if you have a position today, what happens in the next 6 months is probably not going to affect the outcome of the next 20, 30 years. And so why does everybody care about it so much? And the answer is, it's kind of like social media. It's all around us. People are talking about it all the time. The newspapers talk about it. Talking heads on TV talk about it. And everybody gets on TV and they say, well, do you think there's going to be a recession in 6 months? No, I don't think so. Yes, I think it's bad. Yeah, not too bad, but it's pretty bad. This isn't what matters. And people drive themselves nuts with these matters, and they hurt their performance because look at the markets today. The markets are well down, and everybody's afraid about what's going to happen in the next 6 months. And if people get out today because they're concerned about what's going to happen in the next 6 months, and it's going to be very hard to decide when to get back in, because if the market goes down, it's going to be because the news is terrible. And the news is terrible. Most people are not going to have the intestinal fortitude to get back in, and they'll probably miss a rise. So you can't do that timing thing very well. You might as well abstain from trying, in my opinion, because most of your efforts are going to be counterproductive. You're going to sell because you're depressed, which means prices are depressed, and things are on sale. That's not the right time to sell. And you're going to buy when you feel good, and usually your good feelings will coincide with buoyant, meaning high-priced markets, and that's not the time to buy. So steady as you go is a much better idea than in-out. Second-level thinking really is a matter of understanding that the things people are trying to do in the market. Now, you can buy and hold, and you don't even have to think. If you're a long-term investor, it's absolved of the responsibility of thinking and making these decisions on a short-term basis. Buy a good portfolio. Hopefully, we'll help you select a good portfolio and hold it. You don't have to be a genius. But some people want to further enhance their returns by either getting in or getting
Yes,
out.
yes. That is the great Howard Marks. Let's turn that down. If you don't know about Howard Marks, but you know any of the Kardashians, you should be ashamed of yourself. About once a month, man, pick a guy, a gal, and go read up and study on them, man. Pick one a month, man. Don't get crazy. Takes a minute to go through all their stuff, man. Howard Marks runs a thing called Oak Tree Capital. Go read on him. He's a little mini Warren Buffett, man. Good dude, man. Go. He's got some books out there. Talks a lot about market cycles. And he talks about trying to predict is impossible, but he does do some weighting, meaning, and he does do some RSI work, meaning he wants to buy lows and he wants to buy weakness and sell into strength. And he's talking about managing a portfolio, not day trading there. So this here is a 1 minute chart of the TQ. That's not what he's talking about. And if you were to look at this, what direction is it going? Straight down. Well, you know that from the money flow, right? When the 5 days below the 10 and the 10's below the 20, it goes straight down until that configuration changes. Typically, it'll hit support, and we go through a whole bunch of other stuff. Howard Marks. So Howard Mark, Marks. He's got a bunch of books out. Wall Street Legend. I think he's been a trader now 30, 40-something years. Something to keep in mind about those guys is they are trading other people's money most of the time. You need always try to look and see how much of their own money do they have in the fund. If they don't have their own money in the fund, you might not want to be in that fund. Wow, we should have been to the short side here, guys. It is ripping down too. Woo! Should have been to the short side today. We had a nice run up, man, but man, it's been a brutal run down. I am not in it. We're just watching it fall. One of the things about the money flow, and I'm not talking about trading right now, but just investing in general, is that over time, prices go up. And they just tend to come down real fast. But about 70, I think in the book I write 71% of the time, stocks are either moving sideways or they're moving up. And periodically they move down. And when they tend to move down, they tend to do it very fast, whether it's in day trading, swing trading, or in buy and hold. And one of the strategies years and years and years ago that I came across that a lot of people, maybe you know a little bit about it, but I'd really, 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 really recommend that you spend a little time studying it. But it's called The Dogs of the Dow. It's put together by a guy named, what was his last name? Higgins? O'Higgins? Let me pull it up here. I first read about it in a book years ago, and it was called How to Get One Leg Up on Wall Street, I think is the book, is what it was called. Now, yeah, Michael B. O'Higgins. And if you've never heard his story, man, it's pretty fascinating. He was a young dude, and he worked for a firm. And like a lot of firms, you know, if you're a stockbroker, this and that, you're really just a salesman. People that tend to work on Wall Street, very few of them are actual traders. Most of them are salesmen for the fund or for the bank. They're trying to gather assets. Other people do the trading. Michael was one of those people who would kind of pitch the bank's products or the fund's products. And he went and had a meeting one time with this old dude. And the old dude was just reading the paper the whole time as Michael pitched his hedge fund. And after he had been talking for a bit, the old dude put down the paper and looked at him and said, "Son, you see this chart?" And he pulled up a monthly chart of the Dow Jones Industrial Average, and it was this. He goes, "It looks like it goes straight up, dude. What do I need you for?" Now, Michael didn't know how to respond to this. And what he was trying to say is he thought his fund could outperform that. And what this guy went on to tell him is, all I got to do to beat your fund is figure out which stocks did the worst last year and then buy them. And when he left there, he said he thought on that because the guy didn't expand on that. And he went home and he studied and started thinking and started looking because other people have your money, by the way. If you have my ebook, How to Be 10 Foot Tall and Bulletproof, I talk about this idea that other people have your money, other people. People you don't know. And so that guy had Michael's money. And as he went home, Michael sat and thought on it. And he was looking at a list of 30 of the Dow Jones stocks. And then he made a list of the 10 that did the worst last year. And he wrote those down. And he began to back test this, the 10 stocks that did the worst. And he started noticing a lot of them did pretty good the following year. But then he began to sort them by dividend yield. And it was like, what if it was those stocks with the highest dividend yield, which means they've done the worst because the yield goes up as the stock goes down. I hope you understand that. So let's look at Walgreens as one of those stocks this year. Meaning as the stock goes down, the dividend yield goes up. I hope you understand that concept. So what I mean is, if you were to buy, I hope we're on YouTube. Are we on YouTube? And we're streaming. Everybody can hear me? All right, appreciate it. If you were to buy this stock, right, and let's say right here, it's paying a 50-cent dividend, meaning any share you own, you get 50 cents. Okay, and then what about when it's right here? Well, that price may be, what was it, 41 to 35. Well, it's 10, 20% cheaper now. But guess what? It's still paying a 50-cent dividend. So you got a 50-cent, I'm just using you as an example here. And if I buy here, I get the same 50% dividend. If we get back to even, you're still getting your 50% dividend, but my return on yield is much higher than yours because I bought it cheaper. Does that make sense? That's how real estate works too. I once had a financial advisor take shots at me saying I didn't know what I was talking about when I was talking about this concept that you can buy yield cheaper. So if I watch this stock, I don't have to buy it at this price. I can wait and I can pick it up at a lower price. And over time, I'm going to get a higher return than someone that just put 10,000 bucks in and then holds it, like you see in the examples. And they're going to talk about this. Well, that's what he figured out. And what he did is he didn't tell anyone. And he just started buying it for his hedge fund. And his hedge fund started doing really well. And all they were doing was buying the dogs of the Dow and then not telling people what they were doing. And he's the one that figured out the strategy. It's worked for him almost 100 years. And yet there's... Now, here's what I want you to see, though, and the reason that it worked. Going back 20 years, the dog of the Dow has rewarded investors with an annual return of 10.8%. Means 10% every year, year on top of year on top of year. So if you had $1 million in there, you made $100,000. Next year, you'd get 10% on top of 1.1 million. So it began to grow exponentially. Or maybe you just peel off $1 million, you pull off 100,000. So you pay yourself 9,000 a month, and you would always keep your $1 million. So that's financial independence, by the way. Well, if you go and look, here's the funny thing. Well, the Dow Jones average has returned right at 10 point. He says 10.8. I think it's actually 9.8, but whatever. Let's say they're the same. And you're like, well, fuck, dude, they're the same. They are, but here's the difference. Here's the difference, okay? And watch what he says. And this is how they do all finance stuff. For comparison, a $1,000 invested in the S&P would have returned $6,254. If they were invested in the dogs of the Dow, it would have returned $7,776. So the dogs of the Dow did slightly better. But here's the huge difference. If you just have this money in that index, and nobody does this, nobody puts $1,000 in and looks up 20 years later. It's a stupid way of showing investment. You're probably going to add every week, every month at your job, randomly. Well, if I'm following the dogs of the Dow, I'm not doing that. I'm waiting for them to set up, dude. See, I got 10 different things I can add to. If you just got an index, that's the only thing you can add to. So throughout the year, as you randomly add to your index, what they call dollar cost averaging, I'm waiting for perfect setups to add to mine. And so I'm definitely going to outperform it. I have no doubt. Because I'm not going to accidentally buy up here just because, oh, look, it's December 1st. Pull money out of my account and buy a stock. No, we're not doing that. We're going to wait. We're going to pick it up on ones. And then as I follow all 10, if I'm doing that with all 10 going forward, I'm only buying bottoms, man. So let's back that up. And if a stock runs, I'm not adding to it. I'm going to let it run. And that's how I'm going to outperform. And it's not necessarily picking. It's just buying, fearing greed, man. So let's look at, and that's how I took this dogs of the Dow and just tried to make it a better strategy. There's some other little things I do to it too. Let's see. Oh, here's an example. Amgen, right? We were in Amgen way back here. Well, Amgen started selling off. You remember when it went to break out over here? And I'm like, hey, I would not buy Amgen here. Why? Because we can go simply research and see that Amgen's overpriced. It was trading too high. It was still above fair value. I don't want to pay fair value. So if I'm following the 10 dog stocks, this is one of them. I don't want to buy it when it's overpriced. I'm going to let it run. Well, what happened is it came down. Now we're talking. Now it's below the 200, right? So now I'm just watching the money flow, and I'm waiting for a stage one setup. And so as it sells off, now I go look and see, is it undervalued? And if it's an undervalued stock, it's one of the dogs inside of that portfolio, I want to pick up the stage ones. And so look, as it comes down, I'm buying some. I'm not going to buy up here. So as people add to their index funds, this is my problem with index funds. Yes, over time, index funds work. But how do you systematically add at just the right times to catch, And so what they'll say is you can't catch bottoms. Okay, dude, you can't catch bottoms. I catch them all the time. Let's see. That was, where are we at? Few all. Let's go down these real quick. Super important strategy. So much dumb shit I see people learning and they don't understand the dogs of the Dow. It's terrible. So now it's coming back down. Let's check something. What is this stock worth? Do a dirty test. Serious? Come on, man. All right. Let's put in Amgen. AMGN. Come on, man. Oh, I got a good one coming out too, man. We're researching it right now. Let's see. Got a good got a good one coming. Come on, goddamn. What is going on here? Hold on. I don't know if it didn't log me in or something. What in the fuck, dude? Okay, sorry about that. All right, 3% discount. Now, we're not buying that. It's not cheap enough, man. So I'm greedy. So that needs to come down. If it gets down into here, maybe so. And it also activates what we call the bread and butter. So just like Michael Higgins figured out the dogs of the Dow by talking to this old dude that said, hey, buy the stocks that did bad last year. And he began to modify that strategy. I began to modify the dogs of the Dow to help me understand stocks. Chevron. Is Chevron on sale? No. I already know that. What about Dow? We've been buying Dow a lot lower, right? And whenever it's below this 200, been picking it up on stage ones. Well, what is Dow worth? The dividend yield is 6%, by the way. By the way, my dividend yield is much higher than 6% because it's called cost on yield. I bought it a lot lower. So if it's paying 6% up here, it's paying me a lot more than that. Are you fucking... Looks like Morningstar's changed up their page, and I'm not catching on fast enough on the live here. No, they still have it at a 22% discount. So it's still in a buy zone, but it needs to be on a stage one, right? So I can go through that. And as I go through the dogs, I'm going to try to find, now would I buy here? Hell no. But I would buy over here. Does that make sense? And so as I go down, I'm just looking for the dogs as I want to add money. I want to add on stage ones all through the year, man. You know, Intel, we wanted to buy here. We wanted to buy here. You wanted to buy here. So look, you know, look how much lower you're getting priced just as a general rule. And look at this pattern, okay? Watch this right here, man. This is what blows my mind. Sometimes I met a guy the other day at a party and he's like, yeah, I'm just an investor. I don't use charts. And I was like, no, you're just kind of a dipshit and don't know it. But not everybody likes to be told they're a dipshit. A lot of people think they're smart. Let's see, but they're actually not. Let's see. And what was fucked up, man, is he could have, I was right there beside him. I would have been happy to share the secrets of the universe. But I couldn't because he wouldn't shut the fuck up talking, as most 30-year-olds like to do. Let's see. Just talk. Oh, I didn't save it. Sometimes you can entertain angels unaware, and the best thing to do is just listen. Don't talk. He began to tell me all about the market. You know, he really didn't know much. He thought he did. Let's see. I think back on that, too. What an opportunity he missed by trying to convince me how smart he was. So this is where we're at, man. And so if I'm looking at Intel, and I'm just grabbing this one inside of the dogs, do I want to buy up here or do I want to buy here? You know, imagine if you got to meet me and I'm willing to just dump it and we're drinking and I just want to share everything I know. And like, if you're smart enough to take it in, you could take it in pretty fast. And a lot of times I can't do that because people won't shut the fuck up. But 1, 2, 3. So these are the only places we would have been buying it, right? And that's the pattern right here. That's the pattern. Sideways, up, sideways, down, sideways. Isn't that beautiful? And so as I watch the dogs, 30 years of Michael Higgins' study of how to, and that's a sorting and a selecting system he used of sorting the dial stocks. And what he was trying to do is get a higher yield return so that, you know, his clients wouldn't get a 1 or 2% dividend yield, because if that's your yield, you're going to have to start selling shares, guys. So if you're in all index funds, you're going to have to sell shares in order to eat. And what if the markets drop 50% and you're selling shares? Well, inside of the dogs, if you're getting a 4.5%, 5% dividend yield, you don't have to sell shares. You're collecting dividends. And so you would eat the dividends and never sell shares. It's a huge difference over time. They don't talk about it though. We got a guy talking crazy out here. While in 2022 was a down year for everyone, the dogs of the Dow outperformed most other benchmarks. It was down 1.6% in 2022 versus 8% for the entire Dow Jones. So while your index funds were down 8%, it was only down 1%. Now, it changes all the time. A lot of people don't know this. You can calculate the dogs anytime. You don't have to do it yearly. You can just go to the website, come over here, and you could click current doggishness, and it'll sort it by today. And what it's sorting is the 5 highest yielding dividend stocks in the Dow by price, meaning they're the lowest price. They've done the worst is basically what's happening. So because banks have done bad, you see Goldman Sachs is on the list, and Coca-Cola has come off the list. Why would that be? Look at Coca-Cola. Now, it's still on the list. Still on the list, meaning it was there at the beginning of the year. So over here is where you should have bought it. Now, am I going to buy it on a stage 3? Hell no. Let it come in. This is where I want to buy it, right? So just because it's on the list for 2023, I don't have to buy it. It's on a stage 3. I let it come in, set up, and this is where I want to buy it. Now it's run up. It's inside the index. That's how you outperform the index. It's understanding the underlying stocks of the index. I would probably even trim some Coca-Cola here. Probably even trim it. Now I saw Wall Street, what's his name? I saw the Trapper. What's up, Trap? You let me show you how to read charts, my man. Saw a Trap out there talking about AT&T, saying don't buy. Now AT&T does have a lot of debt. It does have some problemos. Woo, look at it coming down. You would not buy this here. Hell no. Don't buy this stock here. It's probably coming down to about $14. AT&T's got some problems. It's probably where it's coming down to. So you don't touch this stock, man. You got to let it set up. It's got to start going sideways, just like it did here. It's like it did there and over here. It actually did it up here on this one, so it got a little tricky. But it needs to come down, man. You need to let it come down. So we'll see, man. Day one, any stop that drops 10%, go read on it, figure out why it's dropping. Don't just buy stocks because they drop. Go figure out why, and then let it set up. And you want to catch this stage 1, man. And if the moving averages are really far apart, if you have my course, Getting Started with Stock Charts, I talk a lot about that. Take your time on that shit, because it takes a while when the moving averages get all jacked up. Let's see if like over here, remember on the FedEx fall? Huge FedEx fall? What'd we say? Don't buy it, man. Don't buy it. See how far apart those moving averages are? Shit, they got to come together, man, before anything happens. So you had 1, 2, 3, 4, 5, 1 week, 1, 2, 3, 4, 5, 2 weeks, 1, 2, 3, 4, 5, 3 weeks, 1, 2, 3, 4, 5. You had a month before you even need to get going on this stock. And then you caught a nice run. So, patience when it comes to investing. We're not trading here. We're targeting zones to buy. Let's check the Qs. Looks like the Qs are coming down. Still holding the 20, man. So what is this? What is this? Let's see. Stage 3, right? We don't know it's going to come down, man. It might. It might. If it does, I imagine it comes down into here. Maybe a little lower. And that'd be a normal money flow movement, right? Sideways, up, sideways, down, sideways. So I really don't try to pick direction. So even day trading, like today, I've been trading to the long side. Um, I'm watching the chart right now, and that may change tomorrow, and we have to start trading to the downside. So if I'm day trading, I'm really agnostic. I don't really have an opinion. If I'm swing trading, use stops. If I'm talking about my buy and hold stuff, then I'm not getting out at all, man. Like there's no getting out of your buy and hold. So as you can simplify this, it makes everything a lot easier, and that's why I try to get people to separate their accounts. Like I don't want to sell dogs of the Dow. I might trim them if they run up real big. I might trim a little bit of Coca-Cola to add to Goldman Sachs. Just hit the list today. Let's see, or last week actually. Let's check Goldman Sachs. You know why? Because it's a Dow stock, it's a bank stock, and it got hit hard. So you had a much better opportunity. There's your buy zone, right? If you understand the money flow, look at this, man. What a perfect. There's our bottom. There's our first buy signal. Price got above the 5-day moving average. Look at this. Look at this shit, man. Look at this. Stage 1, 2, 3, 4, 1, 2. Very quick. 3, 4, 1, 2, 3, 4, 1. And now we're doing a 2. And I imagine it probably runs right up into here. And so if I'm swing trading this, what am I looking for? RSI to go extreme, which will probably be right around in here. It's almost like I've done it before. Hold on, man. I got a day trade setting up. Yeah. Getting long the TQ right now. Might not be in long. Let's go. Long the TQ right now. Getting a breakout on the 1 minute. So let's look at that. A lot of people will ask me that. Now I'm directional. I don't care if I'm trading like that. I really don't care what direction we go. If you're day trading, you have an opinion of price, you're a dipshit. It doesn't matter. Just trade your strategy. If your strategy's we may head down. I don't know. I'm just trading what I see setting up here, man. And it can be tough when the market's changing directions. You can get caught. You might have the ability to catch sentiment fast. Some people can. If you can, that's good. I think a lot of new people struggle with that. I don't think that's really your goal. Let's look at the 3 minute here. So I like to use the 3 minute and the 2 minute. So what I'm looking for on the 3 minute is a stage 1 setup. I want the RSI extreme. I want price to stop. I'd prefer that it stopped there before. This one did. It's a kangaroo here. So that's where we stopped, right? So we stopped here before. We're building a box. I'd really prefer price to get over the 5. It did not. So I'm kind of jumping the gun here a little. But I am getting my sideways movement, and the MACD tells me the downside is over. But we have not broke. So everything is not quite in alignment, but that is a reversal signal, that candle, and we are going sideways. So for me, I would take a shot at this. If it doesn't work, that's cool. That's why we have stop losses. And so I would have a stop somewhere right around in here. Not perfect. I might even be a little loose with it. So if I'm a little concerned, I won't buy as many shares. If I'm feeling pretty confident about there's a lot of time continuity across the daily, the 15, the 3, the 1, we're all kind of going in the same direction, then I'm very happy to trade 2,000, 3,000, maybe more shares. If I'm a little concerned, maybe it's just 500 or 1,000. Take it down a little bit. That may sound like a lot, but if you're day trading, that's typically the size of trades you're doing. Not a big fan of day trading small positions because then I think you just trade it like you're small. And that's not the best way, in my opinion, to trade. I know me and the professor disagree on that. This is the TQ, but, hold on, man. I'm not even on a live chart. I know we disagree on that. Look at that. Bam! Stage 2 breakout, baby. So we're up $50. Now, if I'm just watching this and I'm money flowing, let's say I learned from old GP about the money flow. My target's probably right around in here somewhere. Why? Well, that's where it stopped before. So it's probably going to get hung up there again. And I imagine by the time it gets there, this RSI is going to be banging 70 anyway. Now, I jumped the gun a little bit on that. Now it confirmed. So if we were on a daily chart, listen up. 5-day, 10-day, 20-day, all pointing up. Prices above all three. MACD's up. Everything's breaking out. This thing is moving to the upside, man. So let's just watch it for a second in real time. So that's the money flow in real time if you're trading on a lower time frame. It'd be the same if it was on a daily chart. I disagree with backing up to weekly and monthly. You know, I had a guy today say, man, the weekly and monthly look awful. Yeah. If you fuck around and wait on the weekly to look good, that's going to be 50% move in the stock, man. So I don't give much credence to the weekly. I might go to the weekly to look for levels, but that's really not my concern. It's what is the company worth and what stage is it in right now on the daily. That's my concern. If you start using those long terms, the weeklies and monthlies, you're just going to talk yourself out of shit. It's just too far out to make an opinion like that, man. You know, same with doing micro shit. Like, well, Russia is going to do this, and Biden's going to do that, and oil supply is this. Yeah, I don't know about all that. Like, I don't know. I can't. That's not how my brain works. I'm just watching the money flow, and price is going to do what price does. I don't know. On Tesla, let's see. I mean, I was at a half position in Tesla. Took some off already. Yeah, it broke support. If you're short-term trading this, you should get out. This could go a little lower. You just step aside and let it set up and get back in. If you're short-term trading it. Yeah. And honestly, man, like if you get hits like that, I wouldn't even. I would. You know, I know I'm probably just joking because we're all talking here, but you're rarely going to hear me say, "Oh, that stock's killing me," or "This did this to me." Fuck that stock, man. It's just one stock, dude. You know, so I don't really get that too wrapped up about one stock. Fuck it. I'll catch it on the next way up. So I would let it come, set up, and then maybe we look to get back in a little lower. Let's keep watching this since I got real money on it here. What are we up? We're up about $70, $80 now. So if you get hit in a stock, man, don't talk negative about it. Just do it. Just man up. Do what you're supposed to do. If you're supposed to get out, get out. Don't be one of, well, I can't hit the sales signal because I'll lose money. You already lost money, man. It's already reflected in your fucking account. You're not going to imagine, like, oh, well, if I click the button, it'll be real. It is real, man. Go to the bank and try to spend your balance. That's the money you have. So it is what it is on a stock, man. Yeah, sometimes I get people like, oh, I got to wait till this comes back. That's the dumbest shit I've ever heard. Nobody gives a shit what you paid for a stock. Your balance is how much money you have, man. So you could, and I'm just using this as an example, and I'm not talking about him. I'm just talking in fucking general. Like, this is one of the biggest hangups I see with people. They think they need to make money back in the same stock. It's so stupid. It is stupid, dude. It's stupid. It really is just dumb. Makes no sense. No one, your mother doesn't even care what you paid for it. Nobody on earth cares. The stock doesn't care, you know, and it's like, just fuck, man. If you've lost faith in the stock, you got to be able to ring the button on some and bail on them if you're trading. Now, I'm not talking about investing. And if you're investing, then then you buy more on the stage one, man. If you're an investor, you need it to come down. If you're a trader, you need to trade your plan. So you got to pick what the fuck you're doing. And this is why it's good to separate your accounts, man. Yeah, you're rarely going to hear me talk about a stock hurting me. Fuck a stock. It's just a thing on a piece of screen, man. NIO. Yeah. Actually, this comes down lower. I might be interested in this. Always remember, one man's foreclosure is another man's opportunity, man. So anybody getting killed in the stock, good. Good. I hope they dump it because then I can pick it up, man. So, always think about that too. It's like, what did you pay for it? Nobody cares. Let's see. Oh, DPST. I thought for sure we'd get some follow through today, man. I had a little feeling on it yesterday, and then it popped. So, probably going to add a little bit to this into the close. I got a pretty large position, I'm going to be honest, so I'm kind of cool right here. We'll see how it goes. We're creeping up a little higher. What are we at here? A little over $100 profit. Now, sometimes if you're up 100, maybe your strategy, say you bought 1,000 shares, now you're up 100. Maybe you sell 500. You just made $50 and you move your stop to break even, and now you got a free trade, man. But that's not my strategy. But you could. Yeah, never complain about losing with the stock. Never act like it's personal. Never say it's killing you. Woo, Paul's got the, oh shit, Paul. 10K. That's a big win if we hit, man. Just be careful and let's not ride that bitch to 0 or something, or 1. I mean, make sure you use some stops, at least on half if it turns against you. Just remember, it is leveraged. That's a nice sized trade, though. Uh-oh, it's moving against me. So, what else were we looking at? Yeah, Tesla will come. I don't know. Tesla's breaking support, man. You got to make your call. There's nothing wrong with just cutting half of it either. Depends on what your plan was, man. You should have a plan when you go in, right? Charles Schwab is one on my list. This is back into the buy zone now. 5-day, 10-day, 20. We're still in a stage 2. I like this. Target's up here. If this comes down, I'm staying with it. My target is up here. It's a $70 stock. Uh-oh, we just went negative. So look at that. So we got fixing to have to close it. That was a fake breakout. We're going back to the downside, it looks like. Just like that, you take your loss and you move on. We'll give it a minute and see if it holds this stage 1. There's no need to even respond. Let's see. Fuck that trade. Let's see. Yeah, I like Schwab here, man. Problem is, if the Qs come down, I think these banking stocks are coming down. Now, I added to bonds today, TMF, and I added to Uber, but if QQ comes down, Uber's coming down. So, but I added to Uber. Looks set to run to me. Oh, man. And we are breaking it. See us breaking this zone right here? Not cool, man. Let's see. Sometimes something I'll do is dump on half and then give it a second. Because a lot of times when you dump, it comes right back. Because they know everybody's got stops right there. They know this. Stop hunters know this. Yeah, see, we got to dump. Just like that, you lose money. That is how you lose money. Killed it this morning, man. I think I jinked us bragging about it. It's all right. We got plenty of time. Maybe we can make it up into the close. But definitely on the wrong side today. Should be the SQ for sure. Oh, my man said he was trading the SQ side. See how it came back right there? That happens a lot, dude. So that's why a lot of times I'll just dump half and then wait. Because that bitch will pop back. The stop hunters will break that on purpose, man. Now, if it gets ripping, that'll hurt you. But like Uber here, Lyft, but I don't know if these stocks are going to run if the Qs aren't running. I just keep nibbling on this Lyft. Got a pretty good position going. Man, it sure feels cheap for me. Let's see. Yeah, I said to do it all the time. Sure does feel like it, huh? See how we're right back in the box? We'll see if it can hold that. I don't know. A lot of times when you break the box and get back in the box, that's a very powerful move. Day trading is not easy, guys. Look how we're back in the box right there. You see that? My emotions, what they're doing. Now, it's hard to be emotional, completely emotionless. And emotions really aren't a bad thing. I think they're a bad thing if they lead you to do bad things. See how we're back in the box? Stop hunters, man. Still a negative configuration, though. If we look on the 3 minute, it's back in the box, too. Check the 15. See, 15 still negative. Huh. See, I traded horrible a little while ago, so I'm a little hesitant here. Let me get my shit together. Yeah, man, there really ain't much to talk about today. XLP, I just wanted to talk a little bit about the dogs. Look at this XLP. What the fuck? That didn't happen. Did that happen today? Is that on other people's charts? No. It must be an error, dude. Anybody else have that on their charts? I feel like that's probably an error. Huh. Let's see. Check Procter and Gamble. Yeah, that's an error. See, that's consumer staples, XLP. All those stocks have run up, man. All those stocks have run up. The XLP stuff, we talked about that. Let's check on our XLU, the utility trade, still hanging in there. Had a lot of people wanting to dump this, man. I don't think so. If the market's coming down, this is probably going up. I wouldn't dump it just yet. Been slow to dump gold. We've been long gold. Gold's still holding that 20. I want to give it a lot of room, man, because I really think we could run from here. So I still like the gold. I still like the utility trade. Tech appears to be break. Look at that. See, we didn't hold the box. So that was probably a good chance to flip it and get long the SQ, man. That's what we should have probably done right there. You can see it breaking out now, right? Probably should have done that, huh? That could be hard, though, trying to flip and play both sides, man. That is not an easy play. Look at that long run we had. Man, I wasn't in it, though. Yeah, HBI is still a buy. I haven't been buying it because I just don't think it's gonna get going right now, man. Not against it by any stretch of the imagination. I own shares. I just don't think. Let's see. I could be totally wrong. There just hasn't been a market for it, man. Ever since it got crushed on earnings, it's just not, man. It's just not. There's just no market right now. Yeah, both sides won today. We had a nice run up in the morning, then it flipped, and if you could have caught the flip, you've done pretty well. Let's check on the 3 minute on this. Yeah, look at that 3 minute. It's even extended here. It's hard to flip sides now after you miss this big run, but shit, it could keep going. Sometimes when you're looking at these short charts, you can think, oh, it's got to stop, but these are very tiny moves. I mean, this is from 310 to 3.8. I mean, that could go and go and go and go and go. That could just keep going, man. Looks like it wants to break out now. But again, that we just flipped the sides. If you can get good at figuring out when to flip sides in sentiment, that's never been my. I tend to like to simplify my life and trade to one side most of the time. But I mean, that's a negative configuration. So it looks like we've been going down. You know they cut the dividend on Haynes Brands, right? I hope you know that. Keep up with these stocks, guys. Even if I'm in them, even if I own them, make sure you keep up with them yourself. Like follow along, follow the news on these stocks, and stay with them so you know what's going on. But yeah, they cut their dividend. I'm thinking Kohl's is going to cut their dividend next. So, yep, we're headed down. Looks like we're going down into the close. Let's see. Yeah, look, we just broke support. So let's flip this around. Just broke out. So take this to a 3-minute. Wow. Let's back it up a little bit. 30-minute. See, now it gets a lot choppier. Get into that 30-minute. Get to a daily. Talked about this last week. Do not use these triple leverage funds that are inverse funds. Don't use these stage 1, 2s, and 3s on these. It's not what they're designed for. Yeah, I think the dividend will come back. I just haven't been adding right now. There's a lot of other stuff. Where do you get your news from? How do you know about Kohl's? Their earnings to how much their dividend is not very sustainable. The last earnings call was horrible. I was hoping they were turning it around. They brought in a new CEO. The dividend was low. Looked like they were going to turn it around. At one point, we were up 30-something%, but Kohl's has just gone. They may not cut their dividend. That's just me. If I was running Kohl's, I would cut the dividend. The dividend's crazy high down here, 7-8%, whatever it is. They could cut it so it's a 4 or 5% dividend yield here, and that would give them money to pay down debt. Their earnings have just been terrible. I think it's like 90% of their income is going to the dividend. It's too high. So if they don't cut it, I'd be surprised. And if they don't cut it, maybe they think their earnings are going to grow. But I don't see how they're going to grow with all the headwinds we've been having. It's just like one bad thing after another, man. I may be wrong. It's just me doing a little fundamental analysis that I just can't see them sustaining it. Maybe they can. Maybe they're able to manipulate the books and they can. I hope they don't cut it. I'm going to stay with it. I'm already in it. So, yeah. And you can go look and see what is a stock's dividend ratio payout to their earnings. A lot of times they have it on Yahoo. It'll show you a percentage. So if you go look at a stock like Johnson & Johnson that has like a 2% dividend yield, that's probably 20 to 30% of their income going to the dividend. And that's one of the things that I was saying about Zim. When I was first talking about Zim back in August of last year, everybody was like, oh, the dividend's too high. And it was like, well, if you go read the fucking books and the company website and read what they're saying, they're paying out 30% of profits in the form of a dividend. So if the profits are enormously high, the dividend's going to be enormously high. If the profits are zero, the dividend's going to be fucking zero. That's how it's going to work. And right now, the profits are really high. So the dividend is really high. And they could cut that dividend next week if profits go down. That's why one reason I was telling people, don't make that your largest position. This is a very speculative stock, guys. It's a shipping company. This thing could come down quick, man. But if you actually read on the company, you'll see they're paying the dividend out of profits. As long as a company's paying a dividend out of profits, everything's good. The problem is when 90% of profits is going to a dividend, that doesn't leave much in the way of profits for the company to pay bonuses and to fix up things and to change the store around. And so you want, like Zim kept 70% of the profits for the company. Shit, they could have paid even a bigger dividend if they wanted to. But we don't want them to. But that's what REITs are designed to do, right? Or mortgage REIT is designed to pay out 90% of all of its money in the form of a dividend. That's why the stock price will never go high. AG&C will never be a $50 stock, never. The stock is always coming down in price because all the money comes out in the form of dividends. That's why it's very important that you pick it up when it's low, you know. Good time to add to those. Let's see. And reinvest those dividends so that your dividend goes higher and it offsets that capital appreciation. But just remember that when you invest in REITs, the price isn't going high. It's not designed to go higher. It's going to float around, man. Like if you look at AG&C, I mean, look over the last decade. The highest it's been, let's see, is $15 in a decade. Now it's $9. This is a decade. So it's not designed to go higher. It's designed to drip you money. And so if you can buy them when they're cheap, that's the only way to get price appreciation is by capturing them when they're cheap. Where a growth stock is actually designed to go higher and higher and higher. Yeah, well, again, they have different rules they have to follow. AG&C has to give out 90% of profits. They're a REIT by law. Zim is not a REIT. They're acting like a REIT, but they are not technically a REIT. These REITs have rules. That's why a lot of people smashing on, people smashing on, oh, girl from ARC funds. She's bound by things that she can't help. Look at this. I opened a little SQ position too, just to watch it on the screen over here. It's going straight up. Look at this. So now if I'm in the money flow and I'm trading this is a 1 minute on the SQ. So watch. I wouldn't track it this way. I'd use the other one, but it was sideways, up, sideways, down, sideways. There's your breakout, running up. And now the RSI is banging. So I'd start selling some of this trade, assuming we're probably going to go sideways. Maybe not. We hope it keeps drifting, but I would take some down in the possibility that we do sell some, that we do come down. But hope we go up. We'll see. Wow, came down fast, dude. Much prefer to watch it from this side, the downside. You don't think MP ever could be a zero? No. They own $64 billion in stocks. Yeah? Said you're day trading too much. No, I day trade every tick, man. Day trade every tick, all 6.5 hours. Swing trade it too, watching. No, MPW owns $64 billion in real estate. So go to zero? No, I can't see how that happens. They could bust out and then you'd get paid something, but definitely wouldn't go to zero. That's why, I don't know. I prefer dogs of the Dow over REITs and stuff because dogs of the Dow stocks can actually go higher and higher and higher and higher and higher and higher and higher. And then they can reverse split, like shit like McDonald's used to be a dog of the Dow. Look at this stock going. Pepsi was a dog of the Dow. Verizon, like these stocks can keep going. McDonald's can become a $300 stock. They reverse split it. It runs to 300 again. They reverse split it. It runs to 300 again. They reverse split it. A REIT will never do that, ever. Ever, 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 ever. It'll never do that. It can't do it. It'll never do it. So just keep that in mind. All REITs, whether it's O or AG&C or MPW, closed-end funds are the same way. SLV is a closed-end, or GLV is a closed-end fund that I like, and O is a mortgage REIT, or it's a real estate REIT. This one here is a closed-end fund. It's never going to go that high. USA is one that I really like. Pays 10%. Tracks the market. Pretty much follows the SPY, but its trade range is pretty thin. So it'll never be that expensive. Back it up to a monthly. Look, the highest it ever was $7. And then it came down to like 5. Now, take into account, they're readjusting these charts. A lot of people don't seem to understand that. As they pay out all these crazy dividends, the value's coming out of this stock and it falls 10%. So they're constantly readjusting the price in the stock. But Zillow's a growth stock. It's not going to work right now. If the Q's come down, Zillow's coming down. So I really liked Zillow back here. That was a great price. Up here at 45, not so much. I agree, not so much. Yeah, I don't like Zillow here. I mean, if you own it, great, but I definitely wouldn't buy Zillow up here. No way in hell. Back lower, for sure. Not up higher here. What is Zillow even worth anymore? Can't be much, dude. Let's see. All the shit going on. Let's see. Come on, man. Yeah, they still got it at an 18% discount, so that's kind of cool. Yep, might hold it. I wouldn't buy it. There's no way I'd buy it here. Why do you think MPW? Because they have money and they own the real estate, bro. They own that real estate, man. They own $60 billion in real estate. I don't see how they would go to zero. They own hospitals. I mean, I guess if all the hospitals stop paying, I mean, theoretically, any stock can go to zero. Do I think that stock's going to zero? No. Yeah, I'm still holding GLV, of course. Fuck yeah. I'm trying to get that thing as big as possible, man. Hales, yes. Yep. Yeah, why wouldn't I be holding it? But yeah, MPW is not going to zero. And I would ask you, why do you think it would go to zero? What do you know that makes you think it would go to zero? I've actually been to some of their properties. Yeah. Plug is not the right kind of stock to play here, man. These penny stocks aren't working, guys. This is not an atmosphere for penny stocks right now. These small cap stocks, this is not the place. This right now is all about the large caps, Procter & Gamble, Coca-Cola, like all the big cap stocks, dividend stocks, those stocks. No, I've not been adding to CVS. I don't think CVS is going to work right now. As soon as I think it'll start working, I'm going to add to it. But I don't think it's going to work right now. Yeah, Coca-Cola, I would trim it. It's too high. All of those stocks are overpriced right now. The ones I think are next to run, utility stocks, bonds. Maybe too soon for bonds, but I do think they run this year. Oh, you're talking about, yeah, well, they're different type of REITs. MPW is a hospital REIT, so they buy hospital assets. It's just they buy all different kinds of real estate, man. Just basic rental real estate. They really haven't been hit much in this banking sell-off. I own O. I've owned it for a long time. If it was cheaper, I would buy some. Back here, we bought a little bit. I like O. I got what you're saying, not zero. But no, I own both, man. So right now, I like MPW better because I think it's cheaper. So I'm always buying value. Yeah, so I think MPW is a better play right now. But I own O, so I've owned it for a lot of years. And here's why. See how much further it is below the 200, and the yield's a lot higher, and it's been way more damaged in this sell-off. So I like MPW right now better than O. O's not really that cheap. Let's see, what do they have it valued at right now? Could be wrong on that. We'll see. They got it trading at a 19% discount. That's not bad. Let's see, MPW. MPW has more problems, though. That's why it's cheaper. 42% discount. So you see what I'm looking at? I like the 42% and the higher dividend better than the other one. The other company is a fine company, and I own it. It's just not on my buy list right now. It will be. They rotate. So if you're ever curious what I'm buying, I always set it up Sunday night. I think you should do the same. I do my whiteboards on Sunday night of what I'm looking at. I don't publicly talk about penny stocks anymore, but I do list them, the ones that I am moving on, and it's money flow rules of pi. If you remember, we had K here for a while. Now I've got alt there for a while. So I won't talk about them on my lives, but those are ones that I am looking at. Let's look at alt real quick. And playing usually. So you can see if you follow the money flow, why I was looking at that one. You can see why I'd have been looking at CLSK. Stage 1, big run up. Took some off. Now we'll let it come in. GP, I sold out of VU in my IRA and bought FPE corporate bond ETF for banks. I have no idea why you would have done that. Why'd you do that, man? What made you get out of the VU to do that? Why not just do like a split? Yeah, well, remember, we're talking the price of the stock. The price of a REIT doesn't really matter. You know, the value of a REIT, if it's a $100 REIT, doesn't mean it could be worth less than a $9 REIT based on how many shares are out there. And, you know, and they're a different kind of REIT. AG&C is a mortgage-backed security REIT. They buy paper. O buys physical buildings. So remember, there's different kinds of REITs. They do different things, man. Also, O pays a very leveraged, big time leveraged, pays a lot of yield, man. Yeah, I don't know why you would have. Why would you get all out of the market, bro? I don't know why you would do that. I would never do that. During this volatility. But I don't see any volatility, bro. It's gone straight up. You've had one red day. It's only down 0.87%, man. Man, you need to spend some time with me, man. I don't know what the fuck you're reading or watching on YouTube, man. But you need to stop reading and watching them, man. Sounds like you're listening to a bunch of clowns, bro. Yeah, man. I don't know who you're listening to, bro. But in the money flow, man, we think the market goes up 70% of the time, man. And you need that volatility, man. You need that volatility to come down so you can buy some, man. You need that volatility to come down. If anything, you would want to spread it. Maybe have a little bit in that and a little bit in the other, man. Don't try to get too fancy, man. Uh-oh, we're getting a breakout on the TQ on the 1 minute. What's up, man? Yeah, man. Make sure you read my free ebook too, bro. I don't know who you're trading with. Let's make sure do some smart things though, man. Do some smart things. Figured you'd take profits. And you ain't got no profits, bro. You just got in, man. You got to be in 10 years, man. Come on, man. I've been all in 21 years. Ain't ever pulled out. Come on, man. They got some little blue pills for you. Come on, man. You got to stay in longer. 3 years, man. You should book a one-on-one with me, man. I got to help you out on this before you fuck around and do some major damage to yourself. Stuff like the VU and your buy and holds, don't ever come out. Always stay in, because if they fuck around and it rips higher, you're gonna have a very difficult problem, bro. If that thing takes off, and I mean fucking rips, you're gonna be standing there with your thumb in your ass, thinking, "Oh, I was smart," and then you're gonna watch those bonds plummet, dude. And I've seen people do this. Those bonds are gonna go straight down, and that SPY is gonna go straight up. You're gonna be like, "Man, why did I do that?" And then you're going to be like, well, shit. And then you're going to get back in. Just as you get back in, the SPY takes a dump and those bonds take off. So the best way you want to do that is just have some exposure to all. And then, you can just change your weighting sometimes. But especially you guys in your 30s, you young dudes in the stock market, man, you don't need to worry about that shit. You need to worry about getting some money in. You need to worry about stop spooning so goddamn much and hanging out with your boys and doing all the dumb shit you do most of the time. Get out there and make some money, man. I bet you've been on vacation in the last 3 years too. That's what you need to worry about, man. Toughen up. Probably need to do some cage fighting, man. Toughen up a little bit. Go out there and get punched in the face a little. That's what you get out here with some gangsters. Shit, I was on a shooting here a little while ago, man. Let's see. Where we at? So you guys are living too soft, man. Let's see. Living too soft. Fake ass gangsters. Let's see. Well, maybe you'll get lucky, man. I don't know how you get in. Plus, you didn't hit 70 RSI, so you violated the money flow right there. So learn this strategy here, right here, bro. Learn this right here. Stop watching YouTube. And all your friends are dumb. None of them know anything. I know I'm smarter than all your friends when it comes to this stuff. You ain't got a friend one, knows stock market better than me, period. None of you. Let's see. I think that's it, man. Yeah, I might think that through, bro. Getting out of the VU like that. Did they really, bro? Your financial advisor? No, financial advisor didn't recommend that, did he? No, he was just kidding. Let's see. Let's see. Nah, he was just kidding. If it's time to buy a house, but you shouldn't need your stock money to buy a house, should you? Let's see. GP, who are your friend that does the stock market like you? Anyone that you talk to about the stock market? Very few people that I talk to about the stock market, being honest. I got a couple friends that work at hedge funds. I talk with them. Like I got one guy I talk to every day. It's very fast phone calls. I only answer the phone for 3 people, and he'll be one of them sometimes. And if he calls, I answer the phone, and we have quick conversations about the market. He watches it as close as I do. Yeah, I talk with Chris often. Not Not many guys on social know the market as well as I do. There's a few, not many. I'm gonna be honest. Um, Not saying they don't know the market. I just said not as well as I do. Um, how do I know? Because they're on fucking vacation, and I didn't go, which means I'm a week smarter than you. So yeah, all I gotta do is look at their social and know I know more than they do, and that's real, guys. Like that's real shit, dude. So everybody thinks they're like, oh, I'm gonna do this house thing, okay? But there's other. It's a player eat player game, man. So keep that in mind, man. Um, Plus, you should be confident about yourself. You should think you're a fucking good trader. You should think you're a good investor. If you don't think you're the best, then that tells you what you need to be doing. You know, if you don't think you're the best, then what? You know, I don't know what you need. You know what you're doing. No, I don't talk to the professor about trading or stocks. Usually, when I'm talking to people, it's not trading. We're talking about position trades. You know, we're talking about moves, what we think of a stock. Um, I research them a lot. You know, so I have people that help me research them, and you know, we're trying to look who owns the stock, where it's been, what it can do, earnings, all that good stuff, and see if it matches up. Portfolio management, position sizing. How much do I own of this particular? Do I want to add this sector? What sector's taken off? You know, like this last. I don't know if you've noticed the last couple of weeks, all the defense stocks have been taken off. I mean, you had Raytheon run up. You know, but before that, we had Lockheed Martin run up. You know, we've had McDonald's run up. So, like, what is all that? What is all that about? Why are the consumer staple stocks running up? And a lot of people aren't even watching that. You know, they're watching Plug or Tesla or something. And while you're sitting there playing with that, these consumer staple stocks are running. I mean, they're running up. Um, so, you know, you want people you can talk to like that. Um, a lot of people that try to talk to me about the market, they're just throwing around tickers. And it's like, okay, well, there's 9,000 fucking tickers. And if you just hand me a fucking ticker, I don't know why I'm going to look at it or who you are or what. For all I know, the guy got it off fucking Reddit, you know? So it's hard for me to take people serious if they haven't been doing it for a while. Do you follow a certain criteria for your buy and holds? Yeah, of course. But mostly trying to fill holes in the portfolio. So I'm watching the portfolio and trying to fill holes. Holding in court bond for 23. I'm wrong. I'm holding the downside, so it's limited. Yeah, bro. That sounds like a confusing life to me. I'm long bonds as well, though. So, um, yeah, I don't know. You're too young to be thinking like that. That's not going to make you your money. You're not going to get rich from investing. A lot of people think that investing is going to make them rich. What's going to make you rich is getting your buckets right and putting a lot of goddamn money in, not avoiding a down move. It's being in the down move and then adding at the right time. That's where your money is going to come from being fully invested, making a lot of money and putting the money in there. Very few people are going to get wealthy from investing, maybe over a long period of time, but that's not, your money comes from making a lot of money quickly and then getting that money into deals. That's how most people get rich, or from a business. Um, let's check on, we got this little trade going, so I'm a glutton for punishment. Most big money is not going to come from you putting a little bit of money in the VU every month. That's not going to do much, really. You're going to have a little money in the VU, and then 10 years later you still just got a little money in the VU, and it's like, well, but if you put 35,000 into a property, that 35,000 is going to turn into 150,000 in the next 3 years, and so if you do that three times, that's like $500,000, and that's how you get wealthy, is large sums of money put at risk, consistently aggressive. Same, stocks allow us to do little drips, but ultimately, we need $20,000 in positions. We need $10,000, $15,000 in lots of positions. We got to get it to 500, 700, $1 million. So the downside isn't my worry. My worry is I don't have enough fucking money in the market. That's the worry. So taking a little money and trying to avoid downsides is not what you should do. It's you should try to get as much money as you can into there quickly. And this regular 9 to 5 simple life, that's all you choose that, bro. Like you can do whatever, man. Work 9 to 5, man. You do the big money comes after work. I mean, everything I did came after fucking work. So I would go work at my job, get money, and take that money and put it into the market, or take that money and go buy houses. And that was after work, man. Not like you guys hanging out at the pool hiring people. So like this house looks nice here, but when I bought this house, it was so bad I could only get financing on the land. So the house was $49,000 17 years ago. It was really horrific shape. Took 16 months of working on it, all my capital, all my money, and then I ended up making total like almost $400,000 on that. But that was over a period of time. And so all of these are like all in, all my money. After work, I'm working on them. On weekends, I'm working on them. And everybody that's just the average guy doing the 9 to 5, he's just going to stay fucking broke. And then these are going to start cash flowing and start making you richer. And every one of these came like after work, working on them on weekends, not going on trips, working on them on weekends, pushing all my money in there, working on them one at a time, dude. Just one house. Took years and years and years, man. I'd buy one, maybe 2 a year, just keep buying them. And then work on them after work, And I'd go all in. So I'm the one in here painting, drywalling it, call an electrician, usually for the electrical stuff, and then take this money that comes in and I'd push it into the stock market. That's how I started doing dividends, was I would take the money that came in on the properties and I would push it into real, push it into dividend stocks, man. All that came after work, dude. So yeah, don't buy anything shiny till $1 million, for sure, man. For sure. And but that's not for everyone, man. I'm only talking to some people. Not everybody wants to do that, man. Some people don't enjoy that, man, but is what it is. You wouldn't believe what I paid for this house, man. It's tiny. And so, I keep them all. We list our houses on Zillow, but I keep a website maintaining them all. I don't have my beach property on here, but just one at a time, man. Me and the wife and friends and whoever you can get to help you, man. Just whoever you can get to help you. You don't sell puts any specific reasons, because I like trading stocks, and puts are stupid. See, it's not trading stocks. There's nothing about options that's trading stocks in my world. And I like my, I don't want to, I was thinking covered calls, but I don't enjoy it, man. I don't find options fun. I know everybody else seems to find them fun. I don't find them fun. And, you could create premium. I'd rather buy a house and create premium that way, if that's the goal. Hold on, I'm trying to find this. You know what I mean? Damn, this is trading terrible today. Let's see. We're about to go into the close. So yeah, I'm just not really interested. I'll trade some options sometimes, but it's usually if I'm low on money. It's just not my thing, man. I like stocks. I like shares. I like the ability to move around in them. I like the patience that shares give you. How do you get your deal flow? Here's a crazy idea. I get off my ass and go drive around, and I knock on doors, and I get on fucking Realtor, and I go look at properties. Not that difficult, man. I've never done it any other way than just getting off my ass and going looking. And I drive around, and you'll see me at night on my story. I'm driving. We're looking at properties, man. We drive around. We look for abandoned houses. We look. Now, a lot of guys will try to filter that. They'll be like, oh, let me buy a list of, well, you do that. I'm going to go look at properties. And, same on stocks. I don't need to run filters. I follow fucking stocks. If you follow a lot of stocks, you don't need filters. If you drive around your community, you're going to find houses. If you look on the Realtor every day, you're going to find properties. It's just, you just got to want to look, man. Any advice on buying 175 to 150K already renovated? Why would you want it already renovated, bro? Why would you want it already renovated? You're like 30, so you're going to give me some bullshit. I'm so busy, Gerald. I'm so busy. I can't do it. I'm so busy. Me and my friend, we're running a very busy business and so successful, we just can't do anything. Then you see him in fucking Caicos for the weekend with his boys. I'm so busy, I can't do it. They're fucking on vacation. He's on vacation next week on Instagram. I'm so busy, I just can't do it. Then they're fucking renting a boat. Let's see. That's all these dudes, man. Every 30-year-old I meet is a little punk, lazy. Oh, I can't do it. I'm so busy. Or their girlfriend won't let them do it. Or they've got to get permission from their wife. Oh, I don't know if she'll let me buy a house. Anybody know a great book, QuickBook softwares out there? I don't even know what that means, bro. Why would you need it already fixed, bro? Buy it jacked up so you can get you can fix it. That's how you're going to get your deals, man. But if you're looking for a house like that, you just fucking get on Realtor, put in your parameters, and buy the house, bro. Like, they're out there, man. Let's see. They all know it too, man. All 30-year-old dudes get quiet. But Gerald, I don't want to work. It hurts my hands to hold a skill saw. And it doesn't go with my cologne. All my cologne, it doesn't go with it. And I might get my car, I get pain in my car. You dudes own cars. I wonder, you ain't got no money. You got to buy a truck, bro. You ain't making no money in a car. Let's see. Ladies, let me help you on something. When you meet a dude and he only has a car, he ain't making no money, man. He ain't making no money. Let's see. Buying it already renovated, you miss on the breakout. That's true. I found a house that's partially caught on fire. Could be a good deal. You never know. He says that's sassy. It's true, man. I never met no dude making no money with a car. Let's see. Let's see. We're going up into the close. I'm just watching into the close here. Tried to make a. Oh, sure. I just made some guy mad. It's okay, sir. Trade your truck. Trade your car in. God damn it, we dropped down. Thoughts on Dogecoin? I like Dogecoin. We're working into the close here. Looks like is not my day into the close. Traded well, and then I had that little breakdown, and then it's been downhill since. Not happy with my trading today. I'm just teasing if I picked on you, man. I'm sure you're doing all right. Looking on Realtor every day. Get out there and drive around too, bro. Find properties. Go look at the ones you see online. Go look at them. Walk around. Yeah, walk around. Get out there and look, man. Get out in the community. Drive around. Get out there on Friday nights. Take you a little 40, put it in a brown bag, walk around, see what's up. Wear some bling. Take a pistol with you though. You know, go walk around, man. Look around. Get out there at night. You see me on my story driving around. We're out looking at properties at night, man. We want to see who's out there at night. You want to see what's up, man. Go look around. Get out of your car, walk around. Look at the different neighborhoods. Sometimes you can find good neighborhoods right next to bad neighborhoods. And starting an IRA, what's the best advice? Start vesting. Dogs of the Dow. Go hit my free ebook first, bro. Go hit my free ebook, man. Oh, well, I thought we might have a run into the close. Doesn't look like it. Oh, maybe so, man. We're watching. I'm just teasing the guys with car. Everybody calm down. Trailer houses are fine. You just got to know they're not going to appreciate. I mean, they're fine for cash flow. If you can get them at the right price, anything, cardboard box is fine if you can rent it. You just got to know it's not going to appreciate. I got a buddy that makes money with trailer homes, though. You can get in there and fix them up like a house. That'd probably be my play in California. The weather's good. Uh-oh, we're getting a pop into the close. It's not a house, though. It's not going to appreciate. You know, same with those prefab houses. They're not going to appreciate. Same with like duplexes and stuff. I mean, they're not a bad cash flow play, but they don't appreciate like a regular house does. The only person going to buy one from you is going to be another investor. Always keep that in mind. Who's going to buy it from you when you go to sell it? All right. Maybe we can get a little run here into the close. I can get some of my money back. You know, you just got to ask yourself who's your buyer, man. And you know, the buyer of a trailer house is going to be some person who doesn't have a lot of money, obviously, and that's probably who's going to rent it from you. So you got to think about your clientele and make sure you're cool with them. Yeah, I have Airbnbs. I have one in Florida, beach house. I'll show you my Airbnb. Let's see. Book that condo. These were my dipshit managers. We just took over managing it ourselves. They don't know that, though. Let me see. They have so many, man. That's why I don't like them. They were fucking it up. So I'm going to manage it from a distance in Wi-Fi. So here's mine. Nice deck view, huh? And on the ocean. It's pretty small, though. We're having a remodel go right now because we had a fire. I think a lot of, but this is what I love. Look at that picture when you're eating. That's hard to beat, man. What's up, Manny? Nice kitchen, huh? Not a bad little place, man. 3 swimming pools, oceanfront. There's the unit right there. I paid $312. We collected $36,000 last year in rents. Oh, look, making some money into the close, baby. Getting that money back. You fucked this up. What time is it? I got 5 minutes. I am selling some right now. MFG, if you're in the trade room with us, I just sold some at $26.83. Shit. Could have got a better fill than that, man. What the fuck, dude? All right. We got 4 minutes, so hopefully we get a little more push here. Yeah, so these can be profitable, man. They don't. It's not for the weak of heart. You can get hit with assessments. It ain't, it ain't cheap. It definitely is not cheap. Going to the beach is nice. Everybody thinks that's their dream, hang out at the beach and the pool. It's pretty fucking boring, if you ask me. But hey, if you're a guy that likes boring, you just like to sit over here with your shirt off and try to impress the ladies. I guess some chicks that works on. Bunch of dumb chicks, but I guess it works. Let's see. MP needs to keep dropping. Let's see. So if you're at the pool, ladies, and you see the hot guy there and he's got his shirt off, pretty much assume he doesn't own it. The guy that owns it probably ain't got time. Let's see. He might be like Andrew Tate or something. So, all right, we're pushing back up. Yeah, my experience, the dudes that own it are kind of out of shape, old dudes in the corner. But hey, you never know. Sometimes you get these young bucks, they're loaded. Be like Chris Johnson, just rich. Just rich. Some people got it all, man. Good looking, rich, and God damn, I was sure hoping we'd push up, man. Fuck. I was hoping to get some of this money back. Got a little back on that little pop, but should have sold more. Son of a bitch. Yeah, it's usually my experience. All the dudes that look cool, they don't own the place. They're just visiting. All the dudes that own the place are usually not there. They're working. Let's see. Ladies, just so you know. You meet your man hanging out at the beach, he probably ain't got no money. That's why he's at the beach. Not always, though. You never know. Manny the barber's here. What's up, Manny? I'm just going into the close here. Well, man, I'm just teasing. I have to pick on people. You know that, man. Yesterday I picked on the ladies, so I figured I'd switch it up, man. My wife says, why do you do that? I said, I don't know, man. I just do. I can't help it, man. People pick on me all the time. All right, man, you guys be good. Trade good. That's it. It's a boring day. Not much to see. We'll see what happens tomorrow. It looks like the pressure's to the downside, but I wouldn't get too worried. My man that sold out of the VU, man, you need to get with me, bro. You're doing some crazy shit. Oh, I got to get out of this. I'm all out right now in our day trades. Closed out up 122 on that. So got some of my money back. Wasn't too bad a day. Still profitable on the day, so got to be happy with that. We had some good trades in the beginning, man. I'm out at 20. What did I get out at? 26.78. So right at the high. That'll work. Bam, into the close. See what tomorrow brings, man. Appreciate you guys. Advice on buying. Oh, that was you, my man? Yeah, bro. I really wouldn't want to buy them already fixed inside. You mentioned that earlier. I mean, there could be a reason you're wanting to do that, man, but usually if you do that, you're not going to get a very good deal. And in the way you know, get your credit right, have some money to put down, and start putting in some offers, man. But those usually aren't going to be your best deal if they're already fixed up, because the guy that fixed it up wants to get paid. You know what I mean? And there's the bell. Appreciate you guys, man.